You have built real estate, you have saved good amount of money in the RRSPs, in your corporations as well. But whenever it comes down to using that money, you still are not confident. I've seen million dollars people, those who have a very good amount of net worth, but they have the cash flow problem. Whenever they have to give any gift to somebody, take their kids on vacation, spend some money, they always have to think twice and they are just not confident with it. Let's understand why they feel rich on paper, but they always struggle with the cash flow and what can actually fix it. So the problem here is that we have large RRSPs, corporate assets. Yes, you have a high net worth. You could have a high net worth, but your net worth does not mean that you have a good cash flow as well. No doubt you can use your net worth to generate cash flow, but if you haven't planned well, then your net worth is not helping you spend money. And whenever it comes down to spending, you're still anxious about spending, that there will be tax triggered, you're not sure how to plan for it. So these are some major problems that there are. And why this happens is because most of the retirement assets in your bucket list, they are tax deferred. Let's say RRSPs. RRSPs are locked until your retirement, and even when you retire, you have to, whenever you withdraw, you have to pay the taxes. So you're not really saving taxes, you're just delaying or deferring your taxes. And of course, your retirement assets mostly they're illiquid. Anywhere you're getting tax advantages, they're illiquid. So your RRSPs, you can't really withdraw them either before retirement, or even if you are at the time of retirement, there's still, it's not as liquid as comparatively to few of the other investments, right? So you have to know where your investments are sitting. Not only that, okay, this is your investment assets. No, not only that, you need to know where exactly is it sitting. And of course, it's going to be time sensitive, because even let's say in RRSVs, you have to turn them into RIFs that we will be covering in our next section. But most of your retirement assets are time sensitive. Either you need to keep them for longer to use them, or you need to, if it's a short term, then either they are triggering any taxes or they're giving you less growth. But there is something that is not giving you full control. That's exactly what it says, that your net worth is real for sure. Amazing that you have built all of this net worth. You can say that you own this whole street of multi-million dollar homes. Your net worth is in multi-million dollars, but your cash flow control is very weak. The whenever it comes down to, hey, your kid want to buy a new car, you don't know where to pull the money out. Even though your net worth is in multi-million dollars, whenever your kid has to buy $100,000 of car, you still are confused on how to pull the money out. Shall I take salary? Shall I take dividends? The whole thought process just stays among these two things. But the game is actually much bigger than this, right? And then another problem is your RRSPs and RRIFs. So RRSPs must be converted into RIFs when you reach the retirement age. And all the withdrawals are fully taxable as income. So you ended up saving throughout your life that by the time you retire, you're going to live off your retirement on this. But then you get to know the more you save, the more you pay in taxes when you have to withdraw. And your withdrawals not only will have to make you pay taxes, but it will affect, the more you earn, the more your tax brackets grow. And the more your tax brackets grow, government benefits are going to be less. And of course, that will generate, not give you a full spending confidence. So your withdrawals are always going to affect your taxes. Your tax brackets are going to affect your government benefits. And of course, if everything is affected, then you're just not confident in how and where to spend the money, because you're just thinking that if I do this, I will be end up paying too much in taxes. If I pay too much in taxes, I will be having less to spend for my own self and my family. So all of these things are there. Now let's look at the third problem. If you have money in the corporation, your corporations are not going to give you monthly paychecks, right? You may think, okay, I can invest and I can generate dividends. Hey, your dividends are not, first of all, your dividends are not going to be fixed. Secondly, whatever dividends you earn, that will be considered as a passive income most of the time, right? So on the passive income, as I have covered in my previous videos as well, you pay passive income tax, and passive income tax is 51%. Yes, there is a refundable tax in there as well, which we will be covering in our future videos. But still, that's not going to be too much of a help when you get to know even if there is a refundable portion, you still end up paying roughly 50% taxes on your passive income in the corporation, right? So, simple example, a person, you feel like someone has a $1.5 million in RRSPs as of today, $600,000 sitting in the corporation, their house is paid off. You feel like this person is decent, right? You feel like this person, or if you have this, you feel like, yes, I've built enough, but you need $8,000 per month. And every withdrawal, all you're thinking about is taxes. Every withdrawal, you're thinking about taxes. No doubt you have 1.5 million, but that's your hard-earned money. Even if you have saved it up, even if you have enough to pay off into the taxes, it's still your hard-earned money. You still feel stressed at every single withdrawal. Guys, now this is a liquidity and a control problem. The whole point will come down to flexibility, liquidity, and control. But when we invest, we always think only about high rate of return. It's never only about the maximum return. It is one part of it, right? But you need to have liquidity, control, tax plannings, everything. Many people are able to save, but they don't have liquidity and control. And they end up never using that money. And when it goes to their next generation, again taxes. So whatever you end up saving, again taxes. You may think of building up a trust, whatnot, right? You can't. Nothing really helps much, as we will be covering in those as well in our coming videos. So what exactly is the solution? Guys, there is a concept called infinite banking. In full-fledged detail, what it is, how it works, in the next videos will be coming up, because this whole concept needs another half an hour on its own. So what exactly is infinite banking and what it solves? First of all, it gives you more liquidity. It gives you access to your own capital without selling the assets. Let's say you have a let's say you have any RRSPs, right? Or any IPP plans. You need to access the money. You have to mature those assets. You have to sell those assets. But in infinite banking, you can access your money without even selling the assets. How, what not? Again, as I said, infinite banking I will be covering in my next coming videos. So feel free to subscribe if you want to. And then it also gives you control, because just like RRIFs, there is no forced withdrawals. If you want to use it, use it. If you don't want to use it, let it grow, right? So it gives you tax efficiency. How it gives you tax efficiency? There are policy loans, collateral loans, and any borrowing is never taxed, right? The moment you do a realized income, that will be generating taxes. But if you're doing a borrowings are not taxed. Yes, you may think there will be interest on it. Yes, you may think you have to still pay it back. Guys, that is exactly why infinite banking is done through a insurance product, where your life insurance amount takes care if you never paid taxes, you never paid your borrowings, your insurance amount has to be good enough that will take care of your borrowings and your taxes and your interest as well. That's why people love doing infinite banking through a life insurance policies. All right. So then it gives you predictability as well. It gives you a cash that you can use without changing tax brackets because of the borrowings. You can do policy loans. It doesn't trigger any taxes. Your government benefits are never affected. Your tax brackets are never affected. And you still have the liquidity to spend money with confidence. So the whole point comes down to is tax plannings, liquidity flexibility, and more control, and of course, the maximum rate of return on your money. These are all the things that you should be looking for. But let me be very honest with you. Infinite banking does not replace any retirement planning. It's not that I don't have to do this and I can do infinite banking. I don't have to do this, I can do this. It simply fixes the liquidity gap that most plans ignore. Any retirement planning you're thinking about, it gives you a very limited liquidity. You are into, let's say, real estate, you can say, yes, I can buy home equity line of credit. But if I look at right now, 2025, 2026, right, the market has been very down, and banks are not lending you money as long as you don't have a hefty amount of equity in your properties. So it's not really giving you the liquidity. You're still relying on a bank. Hey, bank, can you please approve me? Hey, bank, can you please lend me money on my properties? I can do construction. I can fix this. I can appraise the value. I can increase the value. it's not, you don't have the liquidity for this, right? But in infinite banking, it's your money. You have how to plan for it. You have the control. You have the ownership of it. But let me be very honest, it's not a replacement for RRSPs. It's not a growth hack or anything like that. And last but not the least, it's not for everyone, right? Not everyone will make sense in this infinite banking, because here you need to have certain amount of income and certain amount of net worth to actually qualify for these things. If you don't know how and what things to work, feel free to DM, reach out to me. I will be adding my contact details in the description as well. But this is not for everybody. It may look good, everyone may want to get into it, but it does not mean that it actually suits the best for you. So, most retirement stress, it comes from having money in the wrong form, not from not having enough. I tell you, today I have, let's say, $1 million today, right? You may think, oh, Karan, you're good, you have $1 million saved up. But what if I have saved up somewhere where I don't have flexibility, I have no control, and if I have to use the money, there will be taxes? Of course, I'm getting good investment rate of return, maybe. Of course, I'm maximizing, rate of return on my wherever the money is sitting. But what if I don't have flexibility, don't have control? I am increasing my net worth, but my cash flow is zero, right? So that is exactly, it's not about not having enough, it's about having it right. All right. So now, if this clarified something, of course, there will be a lot of details on the infinite banking as well going forward. But if it clarified something, feel free to subscribe, because that is exactly what this channel is about. I will be covering a lot of stuff going forward. Feel free to drop your comments in the your reviews in the comment section as well. And whichever is the next topic you would like me to cover, feel free to share that as well. But I hope this helped. Feel free to subscribe. We'll talk soon.